So the Canadian government is considering implementing halal mortgages, which is type mortgage where borrowers do not pay any interest. The rationale behind the government supporting these non-traditional mortgages is they're looking to enable Muslim Canadians and other communities to further participate in the housing market. Now, whether or not we should be implementing halal mortgages remains controversial, and it does pose a series of logistical challenges for these mortgages to be implemented. So today I want to go through the government's plan and we go a little bit deeper into these type of mortgages and see if they can actually work here in Canada. So there are mainly three types of halal mortgages. They are Ijara, Musharaka, and Murabaha. I'm probably mispronouncing all these names, so please do not get mad at me when I do that. So the first one, Ijara, which means lease in Arabic. The bank will actually purchase the property for the home buyer and then lease the property to the buyer till an agreed upon amount is achieved. Sounds familiar? This is actually very similar to rent-to-own agreements that we are having here in Canada. Under these rent-to-own agreements, the tenant buyer will make a payment every month to the landlord. That's a combination of rent plus profit, and then the landlord will sell the property to the tenant buyer at a predetermined price once the agreement matures. The second type of halal mortgage is Musharaka, which means partnership in Arabic. So under this partnership, both the buyer and the bank will purchase the property as partners. So let's say the buyer takes 10% of the ownership, so the bank will have to take 90% of the ownership to begin with. And after taking title of the property, the buyer will make payments to cover the property tax, insurance, and other maintenance costs, as well as buying shares from the partnerships till you buy up all the shares and become the sole owner of the property. The third type is Murabaha, which means for profit. The structure itself is very easy to understand because the bank will buy the home outright for the home buyer, and then the bank will sell the property to the home buyer for a profit. So let's say a bank buys a property for $500,000 and then sells this property to the buyer for $600,000. The bank is already making a profit of $100,000, right? So the mortgage you're going to get based on this $600,000 purchase price is going to be interest-free because the interest you're going to have to pay over the term of the mortgage, it's already built into the purchase price. So these are the three types of halal mortgages that are compliant with Sharia law. But Canada isn't really the first country to promote these mortgages. UK, for example, already offers these mortgages to their residents dating back to at least 2008. In the UK, halal mortgages are not only available for a cultural group, it's available for everybody. So here in Canada, if the government is to implement these mortgages, I think they will very likely make the products available for everybody because it won't be very fair for Canadian residents to be treated differently and charged differently on mortgages. But a few complications will immediately arise if we do this type of mortgages. For example, capital gain tax, which is a big topic in the federal budget, land transfer tax here in Ontario, because under Murabaha, which means for profit, if a bank buys a property at a lower price and then sells this property for a higher price, is the bank subject to capital gain tax? Can the bank pay less tax knowing it's going to be selling the property immediately after closing on it? And does the new buyer have to pay land transfer tax again? The answer to these questions are nowhere to be found currently, and the government's language on answering these questions are sophisticatedly vague. So promoting these halal mortgages, is this a vote bait? Or is the government serious about helping more people get into home ownership?